The third Friday of every month is something we have to be aware of, and that is the options expiration, or it's otherwise known as OpEx. OpEx simply means the third Friday of the month, and there are a whole lot of options expiring. Now you might say, Rob, there's a lot of other expirations. We have 0 days, we have weeklies, some have Monday, Wednesday, Fridays. What makes this Friday so different? It's the size, right? When you take a look, and it doesn't matter the symbol, but it's the open interest that we're talking about here. It's that number of contracts that are open at each strike. Now, this is different than volume. See, volume, if you notice, I don't have volume here because volume starts off at 0 every single day. It's cumulative. Contracts that are open day after day, week after week, that's open interest. The number of those contracts that are being traded is volume. So this is all about that open interest. Now, let's say we take a recent trade that we have on right now, Philip Morris. This we were willing to take in front of OpEx. The reason being is we wanted to be buyers, and we are, it's a profitable trade, and we bought certain strikes. We bought certain strikes knowing that come this Friday, in this case, the 16th of May, see all this size here? Okay, on one hand, you could look at this as support, right? It's a lot of size there. But when it comes to OpEx, it transitions to becoming a magnet. So it's not support, it's a magnet today. And you might say, Rod, how big is this OpEx window? 1 or 2 days. You can really start thinking about OpEx on Thursday, Friday. That third Friday of the month is the big day. That means that today, and even slightly yesterday, Thursday, but definitely today, 165 is like a magnet. Now you might say, Rod, why 165? Why not 170? Why not 155? Look at the size. This means that price action could want to be pulled to that 165 price on Philip Morris. Now, for my trade, that's not a big deal. We have June 20 expiration. I just need to get through the sort of noise of OpEx. If the size was at 162.5 or 160, that would be the magnet. Now, here's the bottom line, and this is the most important question to ask about OpEx. Where does price have to close to leave the most options worthless? So it's a two-step process. One, look at all the calls, look at all the puts, and just sort of add up, even roughly. I'm not saying go get the calculator and tally all this, but just at a glance, you can see there's a lot more size, there's more number of contracts on the call side. So this side is my focus. All right, so now I look at the top 2 or 3 strikes in terms of size. 165, 2, 180, and 3, 177.5. If price closes today, Friday specifically, now remember, Monday we go right back to normal action. But if price closes at 165 on Philip Morris, right now you can see it's 169. It doesn't mean it has to, right? It doesn't mean it has to. But if price closes at 165, these are worthless, right? Now you might say, Rog, it's at 169. Okay, so what's going to be worthless if we close around 169? The 170s, the 172.5s, all of these are going to basically, as you can see here, they're worth pennies, right? These will all be worthless. So the battle is not about max pain. That's actually a faulty way of reducing the nuance of what we just looked at. It's really a matter of degrees. Can 165 get closed at? Great, because then these will be worthless too. If not, all of these will be rendered worthless. And that's the question to ask. Not a singular number, but rather a series of levels that if price can get through, how many of those options can be expired worthless? Now, how do we use that? We use that by looking at this today and looking at different setups. For example, we had Bank of America on our watch list. I like Bank of America, but I know there's a good chance that if this thing is trading at 44 right now, is 43.5 within striking distance? Is 43 within striking distance? Maybe even 42. So if I'm going to set up Bank of America today, knowing that this group right here could be within striking distance, if that is a price level for a setup, we will use this as the magnet to close the distance to the trade. And that is your 5-minute OpEx